Hello guys and welcome back to my channel Accounting Lessons with me Goodson Schari as usual. This is our presentation number 10 and it is on the preparation of the trial balance. In our previous lesson we looked at the general ledger. After the general ledger, if we were to go back to the chronological order of preparation of financial statements, our next step is to prepare now the trial balance. So in this lesson, we'll look at how we balance off the accounts and prepare now the trial balance as a penultimate step towards preparation of various financial statements. Now that we have mentioned the term trial balance, some of you might be asking yourselves, what is the trial balance? What is the trial balance? As the word itself suggests, a trial balance is simply a list of all the balances in the nominal ledger accounts. So this serves as a check to ensure that for every transaction, a debit recorded in one ledger account has been matched with a credit in another record. This was a basic bookkeeping entry rule. So if the double entry has been carried out, the total of the debit balances should always be equal to the total of the credit balance, and that is exactly what this trial balance says. Okay, so furthermore, the trial balance forms the basis for the preparation of the main financial statements, the balance sheet and the profit and loss account, as I've already indicated. This is the step towards now the preparation of the main financial statements. So how do we prepare now the trial balance? So in this presentation, we're going to look at Edgar Edwards, who has got some T accounts, and we'll see how we're going to balance off and prepare the trial balance from those T accounts. So in order to prepare a trial balance, we first need to complete or balance off the ledger accounts. What do we mean by that? So after that, we produce the trial balance by listing each closing balance from the ledger accounts as either debit or a credit balance. So we have some T accounts, as I earlier mentioned, of Edgar Edwards in nominal ledger. So we are going to work out the balances of these T accounts that are showing on your screen. So we have about 60 accounts here. The first one is the bank account, which has 2 debit entries and 3 credit entries. Then we have a capital account, which has a single debit entry and a single credit entry. And then we have furniture account, which has just a 1 debit entry, no credit entry. And then we have bill limited account. This one is an account payable account. It has both a debit entry, which is a bank, and a credit entry for furniture. And then we have a computer account with a single debit entry, and then we have a bank loan account. So by looking at these accounts, as we said, that each transaction affects at least at least 2 accounts. So for instance, if we look at the bank account, we have a debit entry, which is a capital account. It means that this particular person, Edgar Edwards, invested in the business by introducing £5,000 in his business. That's why we have a debit entry going to the bank and a corresponding credit entry went to the capital account. I will not go back into details. We already looked at the double entry rules and how we record each and every transactions. But in this lesson, we are interested in how we're going to balance off these accounts and prepare a trial balance thereafter. So before we look at how we're going to balance off, we have to look now at the procedure for balancing off the accounts. So accounts, as we have seen, are straightforward to balance off if they consist of only one entry, that is only debit entry or credit entry. As we looked at the two accounts that we just showed in the previous slide, there are some accounts which have a single entry. So those ones are just straightforward to balance, because in this case, all the account entries are simply added up to get the balance on the account. For instance, if a bank account has 3 debit entries only of £50 each, so the balance on the account at the end of the reporting period will be 150. We have simply added the 3 debit interest to come up with a debit balance of 150. However, if the accounts consist of both debit and credit interest, as we saw in the previous bank account, so the following procedure should be used to balance off these accounts. So now we're going to look at the steps to follow when balancing off accounts that have both credit and debit entries. The first step is to add up the amounts on each account side. So you add all the amounts on the debit side and those on the credit side. The second step is to enter the larger figure as the total for both debit and credit sides. So the side which has a bigger total, we find the total as the closing for both sides. So for the side that does not add up to this total, that is the side which has a smaller amount, we're going to calculate the figure that makes it add up to the bigger total by deducting the smaller amount from the larger amount. So this is what we call now the balancing figure. So we're going to enter this figure so that the total adds up and call it the balance carried down. So it will be the balance carried down to the following reporting period. So it is usually abbreviated as balance carried down, C/D. And then our next step will be to enter the balance brought down, which is usually abbreviated B/D, on the opposite side below the total figure. So the balance brought down is usually dated 1 day later. The balance carried down as one period has closed and another one has started. So as I've already explained, the balancing figure is referred to as the balance brought down figure, C/D. It is a balancing figure. It is the same figure that will now be brought down onto the following reporting period. So it will be on the side where we had a larger amount. We are going to demonstrate this when we'll be balancing off the T accounts for Edgar Edwards. Okay, let's go right into it. So using the rules that we have just discussed in the previous slide, we can now balance off all the Edgar Edwards nominal ledger accounts, starting with the ledger account, the bank account, which has had both debit and credit interest. So if you look at what we have done here, we added both sides. So this bank account had 2 transactions on the debit entry side, which were amounting to £10,000. While on the other side, on the credit entry, it only had 3 transactions, 600, 200, and then 50, which were adding up to only 850 pounds. So the debit side was the one with the large amount. That's why we took the total for the debit side as the total for both sides. So it was 10,000. And then we subtracted the total for the credit, which was 850 from 10,000. which gives us now our balance carried down of 9,150. So this one will be a debit balance because the debit side had a larger total than the credit side. So the balance on the bank account reflects that 10,000 has come into asset account and 850 pounds has gone out to leave a debit balance of 9,150 pounds. So this is why on the opposite side, on the opposite side to the balance cut down figure, the balance brought down figure is needed to represent the closing debit balance on the bank account. So in short, this bank account has a closing debit balance of 9,150, and it is this figure that is going to be reflected on our trial balance. Okay. And then we go to the capital account. So we're going to balance off the capital account in the same way we did with the bank account because it had both sides. Okay, so the capital account had 50 pounds on the debit side and 5,000 pounds on the credit side. So the credit side had a greater amount. That's why the total is the 5,000. Pounds. So the difference was 4,950, and it is a credit brought down balance because the credit side was larger. So the capital account, the balancing that will be reflected on the trial balance will be 49.50. And then we go to the furniture account. So the furniture account has a single entry on one side. So this amount will as well be the total balance in the account. It only had 400 pounds on the debit entry, and that's why the brought down figure is also on the debit entry as 400 pounds. Okay, that was straightforward. And then we have the account payable for period. So an account for a creditor period limited has a debit and a credit entry. So we'll use the method that we used for bank and the capital account. You look at the bigger side. So in this case, the bigger side was the credit side, which had 400, while the debit side had 200 pounds. And then the difference is the 200 pounds, which was our carried down figure on the debit side. And this now gives us our overall balance brought down figure of 200 on the credit side. And this is the figure that is going to be reflected on the trial balance. Okay, now balancing of the computer and the bank loan accounts. So the computer and bank loan accounts have single entries on one side, just like furniture account, so they need to be treated in the same way. So the computer side had only a debit entry of 600 and the bank loan and then the bank loan side also had a single figure on the credit side. So the computer we purchased by a bank, so we have a closing figure of 600 as debit entry, while a bank loan has a credit balancing brought down figure of 5,000. It means we took a loan of 5,000 pounds from the bank. Okay. Now, from these accounts, we're going to make a list of the balances brought down to produce now the trial balance as follows. So all the figures that had the debit balances will be on the debit side, and those that had the credit balance will have to be on the credit side of the trial balance. So in this case, the debit balances were the bank account, the furniture account, and the computer account, all of which are assets account. On the other side, we had the capital account, and then we had the creditors account of bill, and then the bank loan account, which are the credit balance. So you will note that the total is equal for debit and credit. So from the trial balance, we can see that the total debit equals the total credit balances. So this demonstrates that for every transaction, we have followed the basic principle of double entry bookkeeping. Okay. So that is the end of our lesson. Thank you for your attention, and don't forget to comment and subscribe. Thank you.